So good afternoon, and thank you for being here. It's a special day. We've been unlucky with the tube strikes, but we have moved last minute this event to in person. Thank you for the people who made the effort and online. So we actually recorded both for the Unive Ca' Foscari University portal and City of London-based business school. So it should be okay, and a recording will be made available. Anyway, thank you for being here. First of all, it's a privilege to be at City University of London and based business school, surrounded by a few, but I'm sure there will be many more online, brilliant minds in both academic and in the industry. Firstly, I'd like also to thank Professor Keith Philbin and in conjunction with the Department of Economics from City University for inviting us, and also organizing this event, and of course in conjunction with the other professors and the internal teams who made this possible despite the unlucky day. So throughout my career, I started off quite a long time ago now, around more than 25 years as a financial analyst, first in the City of London and then as an investment banker. And later on, more recently, as an adjunct professor in Venice University Ca' Foscari, I realized that there is a need to better connect students with potential employers and bridging the gap between the two worlds that I know best, which are the financial industry, since I've been there for a long time, and more recently in academia. And this is why we're all sitting here today and online as well. And to do so, I actually invited with me three industry veterans, starting from the far right, Mr. Stefano Nora, who represent the buy side, and we will discover what it means in a few minutes, from Pictet Asset Management. Mr. Philip Haggard, I would say the veteran of the veteran. We know the respect, Philip, in terms of age, who represent the sell side from KPW, Stifel. And then we have Mr. Brunello Rosa, also the sell side, who is also an academics. Actually, you're playing at home here, I think, Brunello. He's an economist, a visiting professor in many international universities, and also on the sell side because he speaks with a lot of clients through his shop, Rosa and Roubini, his colleagues, associates. So I'm sure that we will all leave with room in a better understanding of what it takes to succeed in the city, because over the next hour or 2 hours, what we will be doing, we will share with them our insights throughout our experience in the city, both on the different roles we are and we have performed, but also on the skill sets that it takes to be successful on these roles and how the skill sets have evolved, because clearly things change over time. And we are actually living very special days in the last few days, I would say, especially in financials, since the failure of the American bank last weekend. So I believe that at the end of this session, all of us online and here should have a better understanding of which kind of skill sets is required, how to approach. I'm also quite excited today because after, I would say, 2.5 years of quite intense work with the team, who are also online, so I thank the team online as well. We are launching our venture, which is Mercury Partners Academy. The Academy, which has started, as I said, 2.5 years ago, as its main missions, 2 goals. The first one is to promote financial education, but in a very clear and practical way by leveraging on my experience and of the experience of the guests and of the tutors which have been invited in the masterclass. And the second, and even probably more important, is employability. So it's very dear to me, not just to sell a course, but actually to provide an ongoing educational experience where the students and the graduates will attend. It's online, but then it's also online live at the end of the course. We'll actually have a chance if they want to take an exams, and we will match the best passing the exams with the candidates, with the many financial institutions that the Academy is partnering with. So we are actually had over the last couple of weeks a lot of one-on-one with big firms, with their HR department. I'm confident we will get to 50 or 80 firms with us, and we will represent all the major firms. There is a lot of interest from the HR teams to really use our experience as well and our connection in the industry. So I want to stress that the Academy has at its core employability, because I know how tough it is for students to really graduate, look for a job with no guidance, no real understanding what the role, and this is where we're here. So bear with me at the end of the talk that we're going to start. Maybe the last few minutes, I'd like to take you through the Academy. But before doing that, first of all, thank you very much for being with us again today in this difficult day, and especially welcome to the guest. And thank you, Keith. So going through the agenda, what we're going to do, maybe a couple of slides on the definition history of financial markets. Just 2 or 3 slides. It's not the lessons about the market, but just to set the scene and what it means. Then obviously meet the panel. So each of these industry veterans will introduce themselves and will tell you what they've done and what they're doing. Then maybe what we're going to do is define what the sell side is and what the buy side is, because those 2 big categories embrace not all, but a very big majority of jobs in the financial industry. So at least you have an idea of what sell side and buy side means, and the relationship between these 2, how it has evolved, and then a discussion with Q&A. And as I said, before leaving the room, maybe give me 5 minutes or 10 minutes to talk about Mercury, because this is not a one-off. This is the beginning of an adventure. We want to expand throughout the world, cooperating with the financial industry and top universities like Base Business School and City University of London. So setting the scene, when we talk about the markets, financial markets, we usually talk about 3 main markets. The fixed income market, also known as the bond market, although bond market is the majority of the fixed income market, but the fixed income market has got some other instrument. And in terms of size, we're talking about 136 trillion in June 2022. Then we have the most notorious of the market. Everybody know how to buy and sell shares, stocks, and probably is the most popular. When you talk about the market, everybody think about stocks, and that's the equity market. And again, in the same period, June 2022, it stayed at $105 trillion. And then another big market, which is quite big, actually is the biggest, is the Forex market, foreign exchange market, which actually traded $7.5 trillion per day. I think it is very familiar with this market as well. I mean, your early career, but clearly, so we have 3 main markets. Then there are other markets, unlisted markets, but at least to set the scene, those are the 3 markets we're referring to. And it's quite fascinating how things change. And I've picked this slide from the work of three professors that used to teach London Business School and other university. The source is there. But basically, if we look at the equity market, you can see that in 1800, at the beginning of the previous century, the UK equity market was the biggest in the world at 24%, and the US was the second biggest, and then you can see the other. Now, if we move forward 122 years later, the picture is very different. Of course, there have been wars, there's been revolution, there's been the Industrial Revolution, technological revolution, but clearly that shows how the US have become not only the dominant economy in the world, but also the dominant stock exchange in the world, almost at 60% of the total stock exchange. And the UK, which used to be the biggest in the world, has gone to 3rd position to a mere, relatively speaking, 3.9% from 24%. That is to say to you that you got the most precious commodity of all, time. You're young. So when you invest and you have a process, this slide to me and to us, I think is quite important, because it shows over time how things can change and how important it is to have a broader picture, have some goals, and to allow time to do its work together with you. Looking at returns, again, those are from the same work of the professors. The annualized real return per year over the last 122 years. So it's quite a long time to look at through crisis and so on. And you can see that within the return, the equity market in the United States was the third best returning market at 6.6% per year. So that's the candle, the bar up there. And other countries, in terms of equity and bonds, so bonds return mainly around 2% or just around the level per year. If you see on the left-hand side of the picture, you can actually notice how certain countries which went through war and had weaker economy, like Italy, like Austria, you actually had negative real bond return annualized if you take all this period. Clearly, they were affected by the Second World War, the First World War, and so on. But also the equity returns of certain countries have been much, much poorer than certainly the States and the average. And again, the message here is by using this chart, think about when you do investment portfolios, decision, diversifications, not only by sector, by industry, but also by country, because clearly those things are very important. Now, finally, again, I'm delighted to have such an experienced panel with me today. I already mentioned their names and their institution. What I will say, just a couple of words about myself, and then I will leave the panel to introduce themselves in detail. So without boring you, my experience is quite simple. I've been based in the city of London, and I still live in London for the last 28 years, working in the city for the last 26, 27. And my career has been mainly in 3 blocks. So the first block, I started as an equity analyst, first credit analyst. I was working in a rating agency, and then equity analyst for major European and US banks, analyzing the banking sector. So I was one of that is called sell-side equity analyst, and then we will see what it means. And I've done this for roughly 17 years. The second part of my career, I became actually an investment banker. So when you are a sell-side analyst, you are very prominent. You go on TV, if you want, you meet with people, you meet with investors. When you become an investment banker, you work behind the scene. So you move from the public scene to the private scene because you become a deal maker. You obviously are not going to go on TV and say, oh, we're working on that deal and on that deal, because first, you're not allowed, and second, it doesn't work that way. And so the last 8 years, I've been an investment banker. And then I started in academia with Ca' Foscari University in 2017. I was part of the technical committees of their business school called Challenge Business School at Ca' Foscari, and I started teaching last year in Venice. I teach economics and techniques of financial markets, and that's how I started thinking about the academy, and I'm teaching again. So that's more or less my career. And here you can see some of the right issues I have followed and personally done on most of them on Italy, not all of them on Italy, but many on Italy. So when the banks were needed capital, actually today is a special day. I don't know if you follow the market, but without mentioning names, we are starting to go into, unfortunately, things we saw quite a few years ago. But basically, when banks need capital, I was one of the bankers that actually helped the banks to approach the market and get. And so all of these figures at the top is that. And then I helped the banks to sell non-performing loans. But enough for me, and I will start with Philip. Philip, thank you for coming, first of all. Would you like to introduce yourself?
Yes, so I'm Philip Haggard. I work for KBW, which is part of a mid-sized investment bank called Stifel. Is it like, can you hear me? Is that working? Yeah. So Stifel Investment Bank. I work in the investment banks, but I guess they divide their activities into sales and trading, which is activities for investing clients and institutions, capital markets, which is raising equity and debt companies, and then advisory, which is advising companies. Well, the biggest part of their revenues tends to be sales and trading, so I'm located in that. I work in the equities business, so company shares, and I work as a salesman. So that means my primary job is talking to investors, marketing our research to investors, and also working with colleagues. Is that sufficiently long introduction?
Sure.
In terms of my career, I've been doing it, as Marcello said, for quite a long time, which is kind of problematic. Like, there's an argument that if you've been doing it for that long, you can't be that good at it because you're retired, after sort of. So, take anything I say with a pinch of salt. But I've worked for a variety of investment banks, large and small.
No, but I know with having worked with Philip, I have to say, you see him like this today, but he's probably one of the top guys in Europe with a true understanding of financial and with a specific in the insurance sector. So, and he likes to work. That's why he keeps doing it. Brunello?
Good afternoon, everybody.
You want to come here?
Yeah, maybe. You think it's better?
Yeah, I think.
Good afternoon, everybody. So my name is Brunello Rosa, and I'm the CEO, Head of Research, Rosa Roubini Associate, independent macroeconomic geopolitical research firm that I co-founded with Nouriel Roubini. Some of you may remember this name as the one person that predicted the 2008 global financial crisis. It seems like we are getting there again. Hopefully not. We'll see what happens in coming days. And I've been in the private sector for many years, but I've also worked at the Bank of England. So on the other side of the equation, if you want, in markets. And that was actually during the financial crisis and the Euro crisis. I've always also taught in academia. I've been teaching at the LSE macroeconomic analysis and financial analysis for the last 18 years now. And since 2018, more or less, I've been teaching also at City University. My course, undergraduate, geopolitical macroeconomy. More recently, I started a position as visiting professor as well in Bocconi University, teaching cyber risk strategy and governance. And all these things that seemed so separated a few years ago, macro, finance, political risk, geopolitics, and cyber risk now tend to converge quite nicely if you want. And that's what we do professionally. We provide the link between these various aspects of economic activity.
Thank you.
So good afternoon. My name is Stefano Nora. I'm Italian, but I've been living in London since 2006. I studied in Italy at university, and then I moved to Ireland, where I did my Erasmus project there, and also a master in finance. I started my career working as a consultant back in Italy for 3 or 4 years, and then moved back to Dublin again, working for an asset management company called Pioneer. But Pioneer was at that time owned by UniCredit, one of the largest Italian banks. I stayed there for 5 years, then moved to London working for JP Morgan Asset Management. And since 2008, I joined Pictet Asset Management here in London. Pictet is, I have a slide later, maybe to give you a couple of details. Pictet is the third largest Swiss bank, still privately owned, with more than 200 years of history. It's not listed in the market. It's still privately owned by individuals and families. And I've been working there since in what Marcello mentioned several times as a buy-side analyst. So all my career, apart from the first 3 years as a consultant, I've been working on the investment side, on the buy-side analyst for JP Morgan and Pictet and Pioneer, where we cover different sectors, or each analyst cover different sectors. I always looked at the financial sector, both banks, insurance, diversified financials, and real estate. I worked with Marcello and Philip for several times as a counterparts. I how we get to know each other. Probably I stop here as a first introduction, and then we speak about other things.
We'll keep coming to my computer, so also the Zoom people have can hear from you, and we make sure everybody is on board. So we talked about definition and roles on the sell side and the buy side. What does it mean? And you got examples here today. So part of the financial industry that is involved with the creation, promotion, and sale of stocks, bonds, FX, and all other financial instruments to the public market is known as sell side. We also include non-listed stocks like private equity, private debt, things that you don't see listed in the market every day. And the sell side individuals and firms works to create these products that are very available to the clients. One of the clients is, for instance, Stefano. Stefano works for Pictet Asset Management. Pictet needs to manage their clients' money, need to invest their clients' money, give some returns according to their guidelines, objectives. And so they interact with individuals and firms like Stifel KBW to read the research, to trade with, to have insights, in case there are also investment banking deals, firms that have investment bankers like I used to be. And so this is the interaction. So, and the sell side includes credit and equity research analysts like myself. I've been a sell side analyst for many years, economist and geopolitical expert like Brunello, sales, traders, and also bankers and corporate financiers, like my second life has been the one of an investment banker. And as I said, we see it as intermediaries between our clients, which are the buy side, which then managing the money of their clients. So this is a broad definition. We'll go much more in details on the roles. In terms of starting with one of the roles on the sell side in a broker or investment banks, I will start with Philip, who's going to take you through what he does, what he's been doing, what his daily activities are, how they have changed. Philip, if you don't mind, come here and we'll take you through.
Okay. So to recap, I'm involved in equities as a salesperson, and the way the business works is the source of the revenues is from institutional investors, insurance companies, pension funds, hedge funds, and we're paid either by a fee for our research or via trading commissions and on each trade that we execute. The key part of it is key part of the service that I'm involved in is the research. But I often think that equity research, the name research, is a bit of a misnomer in the sense that I mean, a lot of it is frankly, in a sense, not that good and very repetitive. A large company will have 20, 25 analysts that follow it. They'll largely be looking at the same information which comes out from the company itself, its financial statements, its reports, its outlooks, and so on, its investor days. And there'll be a spectrum of opinion, on each company. There'll be, a bunch of most of them tend to be more buy recommendations and sell recommendations. And investors will be, very much aware what the key issues around the stock. So I would see the research as, in a sense, it's more like a specialized form of journalism that with some modeling and forecasting at the same time. So a good analyst, I think, is somebody that knows the company well, knows the industry, can process information quite fast, can summarize it very concisely, and hopefully can come to a good recommendation. But I think most of our clients, I think they value the kind of the quality of the interpretation, the knowledge more than the recommendation itself. And why do salespeople exist? I guess it's because there aren't enough analysts, don't have enough time to talk to the whole client base. In theory, your investor would probably want to talk to an analyst most of the time, but he simply doesn't have the time to do that. So you need a sales force that can speak for the analyst, that can communicate what the research is saying, and hopefully over time develop some expertise and specialization himself. So salesmen typically will work on one market, the US market, European market, etc. And then there are also, like myself, there are a percentage of those, a minority, will also be sector specialists. So in my career, my specialism has been banks and insurance companies. At the moment, it's insurance companies, and the big investment banks will probably have one or two specialist salespeople per sector in a major market. It's probably more common, I think, in Europe than in the US to do that. So to some extent, one is sort of speaking for the analyst. As a specialist, you're also working with your colleagues. So they are looking for interpretation of news and events through the day. There is a certain amount of writing involved, of kind of internal and external emails. In the old days, the main form of communication with clients was getting them on the phone. That's now extremely difficult. They move to voicemail, and many of them don't even have voicemail. So you have to communicate through email, through chat rooms, and so on. Through Bloomberg is a most common form of communication. There is the value added one's trying to offer to clients and to colleagues is filtering the best of the research, generating some ideas oneself. And I think the ideal, what investors sort of value in a salesperson is knowledge of the research and of the companies, kind of an understanding of who the good analysts are, or what the best qualities of each analyst are. Being an analyst is quite a diverse job with lots of different skills involved. Some analysts have the full skill set. Some are better at other things. So it's kind of knowing the strengths of your research team. The other thing I think that our clients value in our sort of salespeople is that when they're talking to them, they're not just hearing the view of the view of research. They're also, in a sense, talking to the market. They value the fact that you're talking to a number of investors. So if you're a good salesperson, you're able to develop a sense of kind of where the market is on a particular stock. What are the things that people really like about it, don't like about it, are worried about, so that when new news emerges, you have a very clear understanding of the impact of that news, which you don't have simply by analyzing the company. It's by understanding what the market thinks about it. Part of what one does relate to capital markets, and not just to the institutional investors. So part of our revenues are involved in raising money for companies. And so we will get involved in if there's a capital raising, like a rights issue or a flotation, an IPO. As a salesperson, you get involved in pitching to get that job, and then in promoting it to investors. Is that sufficient?
Yeah, no, that's great. We'll have Q&A at the end, but so at least you have a sense before of maybe the shift, but you already touched the shift, yeah. So from telephone to there was the next slide. You already touched on this, I think, how your job has changed, shift from telephone and physical meetings to email, chat room, and so on. So Brunello, do you want to talk to us in your business capacity when you talk to clients, how you go about it, what you discuss?
Thank you. Sure. So what does an economist do? Well, the first thing that is expected from an economist is making predictions, okay? And it's not an easy job. The one thing that you can do is, first of all, doing forecasts of macroeconomic variables, GDP growth, inflation, unemployment, all these variables that little by little you learn how to forecast with various techniques. If you are a strategist, you would also be asked to provide a forecast for asset prices. Maybe equity prices, might be bond market prices or futures, options, depending on what you're a strategist for. The job requires releasing this information, this forecast, prediction, analysis, and so on, to both external and internal clients. And this needs to be done at the same time. This is to avoid what is called front running, which means you tell somebody in advance what you think, and then to others. This will provide an unfair advantage to the person receiving this information. Little by little, regulation, MiFID II and whatever, got stronger and stronger on that. There's a key set of rules that you really need to follow when you do your job. Nonetheless, even if you disseminate your research and analysis, predictions, forecast, and so on, all at the same time, that's, as I said, a requirement. You have to talk also on a bilateral basis with your clients, because they can call you and say, hey, what's going on? Give me a bit more color on what you have just said, what you have just published. And that's, a key part of the job. So you might do a bilateral chat, but sometimes you organize roundtables, you organize events, you organize conferences where you speak, where you kind of give your views of the world. And that's kind of the more desk-based part of the job. But the job doesn't end there. First of all, you will have to go around and meet both with the somehow sources of your predictions or one of the inputs, and secondly, to the end recipients of this information. So the sources would be typically, for a bond strategist, would be typically central bankers, or government officials, and the likes. And you have to go there, you need to meet with them. Again, the rules about these meetings have become stronger and stronger and stricter over time, again, to prevent these policymakers to give any form of kind of private or privileged information. But even if they don't tell you anything that they wouldn't tell anyone else or in public, that's the requirement today, you still get a sense of the way they reason, what they put more emphasis on, somehow the reaction function that they have. So those meetings are still very much useful, and that's why a key requirement of the job is traveling. How do you get judged? Well, first of all, you need to be good at your predictions. So if you don't make good predictions, you won't last long as an economist, I would say. Of course, there might be the risk of being most of the time in line with consensus, which means I say something like everybody else. If I get it wrong, everybody got it wrong, so I'm not going to be punished for that. There's a bit of an asymmetry, of course, of being singled out as the one that didn't get it right compared to those who instead, stuck out their neck and said, well, I'm going to say something out of consensus. But you're not going to be, you're not going to make a very successful economist if you're always in line with consensus, or if you don't have strong views, because effectively you could be replaced with anybody else at any point in time. So just to give you a rough guideline, if you get it right 50% of the time, it's like a towing cost, so you're effectively useless. But if you get it right 60-40, you're already on the good side of the equation. On 70-30, this is excellent, I would say. Being right seven times out of 10 is not an easy job, actually. 8-20, you're effectively a guru, in the sense you almost never get it wrong. And here I put if it's 40-60, so you're most of the time you're wrong, you will soon lose your job, but you will be first used as a contrarian indicator. In the sense, people will do the opposite of what you suggest to do.
It's also important to be consistent.
Exactly.
But as a client, I would value more like 40.
Then 50-50. So don't be a coin toss. Okay, so I think I can
Thank
stop here. Yes.
So I'll tell you a bit my story, maybe continuing with Philip. So Philip sits on the desk, sales desk. When I was working with Philip at KBW as an equity analyst, I was on the guy doing research. So I would write about stocks, and I would help to issue recommendation, buy bank A, sell bank B. How were we organized at that time and today? It's important so you have an idea of the evolution. Usually in not such as in specialty firms like KBW. KBW is a financial specialist, so they are really 100% in all the financial stocks. But if we take non-specialist firms, you would have sell-side analysts covering different sectors. Could be media, utility, financials, and so on. So generally speaking, if you want to look for a job on the sell side, know that they're usually structured per sector. So utility analysts, bank financial analysts, and within financial banks, insurance, and so on. The other thing that we already said that the clients are buy-side investors. What does a sell-side analyst do? What did I used to do? And it hasn't changed much apart from the coverage that we will touch. You have to write about the stocks you follow, which is called coverage. So each analyst has got an assigned coverage. I used to follow throughout my career Italian banks, Spanish banks, Eastern European banks. So that would be my coverage. So the sector is banks, and the coverage used to be geographical. In the old times, before the euro was created in 1999, 2000, and later on, there was still a strong geographical bias at that time. You would have UK analysts following UK banks, Italian analysts following UK banks. There would be a lot of geographical bias. Now, as Philip was saying, because of regulation, MiFID and other regulation, and because also pressure in the industry, I mean, revenues have been under pressure both on the buy side for fees. Clients don't want to pay as high fees as they used to pay in the past. On the buy side, Stefano will talk about that. I don't want to spoil his talk, but mainly on the sell side, revenue pressure. Today, you could actually have a sell side analyst, myself. I would be covering probably 20 stocks from Italy, Spain, and Eastern Europe altogether, because the P&L, profit and loss of my firm and of my specific shop has shrunk, and so you need fewer people to cover more stocks. Daily activity, as I was working not just for KBW, but for Dresden Clever Benson and other banks. At that time, I remember big trading floors. There was still, the euro wasn't still there, you would have still. So if there was a news early morning affecting your stock, you would have to go like you would have a traffic light system, and you would have to speak for 3 minutes saying, this is the news, this is the impact on the stock. I think there is an overreaction, an underreaction, and this is why I think so. And you would have to address the entire trading floor so that salespeople, traders, they could all go on the mic. Obviously, if they believed you, if they wanted to, if you were not on a 40-60 side, but you were on the 70-30, so they consider you like a good analyst. And then Philip will go on the phone, he will call his client base and say, look, you can buy that stock because our guy who has been quite consistent and good thinks that. I agree with him. And so that's one of the daily activities. Then you would participate in the morning meeting notes. So your piece of news will be incorporated into like a daily telegraph, no reference to the paper, but I mean a daily bulletin that will go sent out to clients. And so on. Then obviously part of the job was to meet clients. So people like Stefano, you will meet in a meeting, over a coffee, over lunch. And if you had something interesting to say, and it's usually buy-side clients in the past would take a meeting if they knew you, if they thought you were good or decent, and if you had something interesting to say, because there are many other analysts writing about the same, so they haven't got all the time to meet. Then you would have the so-called marketing trips. So marketing trips are not only across the road or across 3 blocks meeting London-based clients. You would take a plane and go and see buy-side clients in different countries. And sometimes you will go and see clients in different continents. So I used to go to the US, twice a year, sometimes even 3 times a year. When I was top-rated analyst for a couple of years, you would have kind of the obligation in a way to go and see a lot of clients all the time. You also have to do what is called clients field trips, which in my opinion were the best. So I would take buy-side clients, I would take Stefano and other people. We would go and visit the top management of a few banks in a country. And that's very good because it's very synergic, because as an analyst, I am in touch with buy-side clients, so I'm giving them a service because I'm taking them with me. I'm actually going to talk to the top management of the companies I need to follow. So it will be a service to them. I bring clients to them who could buy their stocks. And I would also learn myself. So the client field trip were really the top for a sell-side analyst, because it's like closing the chain. You basically interact with all your stakeholders. The other thing that, and then you would have, of course, the so-called non-deal roadshow, deal roadshows. So non-deal roadshow is when I take a company that I follow, a stock, the management, and I say to them, let's go to the US, maybe a European banks, and let's meet US investors to promote your stock. That's called a non-deal roadshow, because we're going around with a company simply to talk about the company, hoping that the buy-side community will like the equity story, will buy the stocks. And that's called a non-deal roadshow. A deal roadshow, I'll talk to you later on. As an investment bankers, you have a deal and you go with a company because they need to raise capital, but that's called a deal roadshows. How do you get paid? How do you get judged? Analysts have got 2 main surveys which are still around, which are called Excel and II. One is American, one is more European. And basically, you will get votes from the buy side. The buy side will have to vote analysts by sectors and so on. And you get a rank. And if you have a high number of votes by the buy side, you are top there. Obviously, that's one of the measures because it gives you visibility. How do you get paid? You get paid by how much money you bring in the house as a sell side. So the trades that your house make, because they're called secondary commissions, because people will call in and based on your research and will execute the trade via the sales desk where Philip and the trader sits. Or maybe some clients just write checks with the abandonment commission, the regulation, and maybe your research will be particularly good, so people would like to pay for your research. So they don't trade with you, but they just give you a check. And so these kind of puts in context, if you wish, what Philip and Brunello and myself have been doing on this big category called the sell side. Moving on and finishing to investment banking, and then we move to the buy side. Investment bank has been very similar in terms of setup to the sell side equities. So you would have a very similar, not identical, but very similar structure. So by sectors or by geographies. Of course, even here with more pressure in the industry, if you are an investment banker today, you might end up following not one country banks, but different countries banks. So you will be following maybe European banks or Southern European banks, or so not anymore a single country. But the kind of setup is very similar to what it used to be to what it is on the sell side. The major difference is that you are not public, you are private. You are an investment banker. You are separated by compliance from sales and research. So if I'm working on a deal, I want to raise money for a bank because I think that bank raised money. Of course, I'm not allowed to tell research, my equity analyst, or to tell sales, Philip, that banks need capital. What I am allowed to do as a banker, I'm allowed to talk with them and find out what they think. What is the market thinking? what are the analysts writing about. So collect information, make my own opinion, research by using my analysts, research by talking to buy-side clients like Stefano, whoever they invest in the market, so they know exactly where issues might arise, or they have a good idea where issues will arise. And with that information, then, if you are an investment bankers, then I need to do what? I need to pitching. So you need to take all this information, make some beautiful slides, go to the top management of a company, a technology company, a bank, whatever sector you follow, go there and promote the deals. And the deals could be different. You could promote an M&A deal, merger and acquisition. You basically build a case for them. You say, look, I think you should be buying your competitor, or I think you should expand your business by going abroad and buying that company. So that would be an M&A deal. Or you should implement what is called an ECM transactions, equity capital market, which meaning raising capital or raising money, because for various reasons, it could be raising money to fill a gap, to prevent the banks going bust if the market will give you money, because it's not always the case. Or you could actually raise money because the company is managed extremely well. It's a very good time to raise money because you have a good market momentum behind you. You know that the market will back you. And with that money, management will be able actually to do a few things, to use the money for acquisitions, to have a good track record, or basically to have a bit more money when the time is right to deploy in an intelligent way. Because for raising money, there is a cost. It's called cost of equity. So you need to make sure that whatever you do with the money you raise, you're gonna earn something higher than your cost of equity. Otherwise, it's not a viable transaction. Not viable is not economically profitable transaction for the shareholders. In terms of how do investment bankers get paid and how do they get judged? Well, remember, whatever job you're going to be doing is very likely, unless you do some back office stuff. If you are on the front line, you will always be judged by how much money you raise. If you are on any desk, on the sales, even if you think you're not, but you haven't got a back office job, money is the first indicator. So that's important to know, because if you don't think so, you're missing an important part of the puzzle. Obviously, it varies according to which desk you are, which department you are, but like Jerry Maguire, follow the money, have in mind the money. Money is important. Then, if you are a banker, there are the so-called M&A league table. So each investment bank will publish at the end of the year the deals they made, the sector they made, how big these mergers were. Obviously, mega mergers make front line. So if you are one of the banks who had advised very big deal, it will be good for the banks, it will be good for the bankers. And clearly the primary commission generated by the bankers, so how much money we raise in terms of M&A deal, ECM deals, those will be your main way to get paid. So there will be a profit or loss for the team by generating commissions, and you will get a bonus or no bonus or cut bonus according to this is how you get paid. So I will leave now the floor to Stefano to talk extensively about the buy side.
So if you're still confused about buy side and sell side, don't worry. I remember my first interview when I started working at Pioneer. They asked me, why do you want to work on the buy side and not the sell side? And I remember I looked at them like, what are they talking about? What's this buy side or sell side? I had no idea what it was. For me, I just made up an answer that I thought it was reasonable. I told them, I want to work here because I want to invest. I don't just want to write research for other people, but I want to take the action to put my ideas at work directly in a product. So this is for me is one of the main differences probably between the buy side and the sell side analyst. We are all analysts. We all look at the same companies. We all do similar analysis. But I think one of the main differences is that depending on the institutions, I can take the decision to buy a stock or not. While Marcello was trying to advise me, and Philip as well, to do that, or give me an indication what they thought it could have been the best idea. But On the buy side is when you do the execution as well. But before I go into more details, I just want to tell you, just because there are a couple of data, actually the one that I wanted is actually hidden by this bar.
Yeah.
Here we are. So Pictet, as I said, is divided in 4 main groups. I work for the asset management one. Then we have another one that's the wealth management. So we manage money for wealthy clients. In the asset management, we manage money for institutional clients like pension funds or large institution, or we distribute the funds through the financial advisors. So the final clients can be retail clients, but the money comes to us through financial advisors. And we just do that. We are not JP Morgan or UBS, where they have the wealth management, the investment bank. We just do investments for clients. We have in Pictet Asset Management, we have 1,000 employees, roughly, but what is more relevant, what we're talking about today, is that there are around 400 investment professionals. These are not just analysts. These are analysts, portfolio managers, risk managers, and I think also some of the sales team, so our marketing and sales team, that they try to promote our products to the final clients. And so this is the group where I work for. One of the people based, we have 30 offices overall for Pictet, 18 worldwide for Pictet Asset Management. I'm based here in London, here in Moorgate, not far from here. But what do we do now? There. So if I look at my day, we start early, but not as early as on the sales side. And when I arrive at the office, and let's say between 7:30 and 8 o'clock, I already have a lot of emails written by the sales team, the sales side analyst, on things that happened that morning or the night before about many different companies. So they wake up earlier than I do. And we then we have a morning meeting. This one varies accordingly to the companies. We have our at 8:30. But also one thing I want to say also, the role of the buy-side analyst is different based on what institution you're working for. We are a more kind of a long-only, at least the group I work with, is a long-only institution. Where we take long-term views. We don't trade generally on the single news in and out of a stock. We try to analyze a company, thinking about what this company can do 3-5 years times, their competitive environment. So we take positions that stay in the fund for a long period of time. If you work for a hedge fund, the activity, particularly we guess early in the morning, is much more hectic. They want to be the first one to speak to Philip, to get his view that maybe Philip spoke already to other people or spoke to his own analysts, to understand where the market is going to position itself on a single event. We take a bit more longer term view. So we have a bit more time to think about what the events really means for our company, for our, which is more important, the investment case in the company. But we write also research. We write research, but it's only internal research. Marcello would write about the stock, and maybe it ends up on the newspapers that Marcello said to sell this stock. We don't do that. We write research only for our own benefit, for our own firm, that we use only internally. And the research very often, should be aligned with your investment philosophy and investment process. There are funds that are only value fund, others that are growth fund. So I cannot start talking about a value stock if I'm a growth fund. So my research should be in line with the process and the philosophy. We, particularly at Pictet, we are focused, we are in kind of multi-boutique approach, which means we don't have a centralized research. Other firms, maybe the JP Morgan, Fidelity, you are a buy-side analyst, you write your research and you send your research to different portfolio managers in the firm. that they use your research to buy the stock as well, and to compare it maybe with the research that the sell side has written. For us, all the analysts are working on specific products. So we interact between analysts and portfolio managers, and the analysts can also have the opportunity, as I said, to say, I want to buy this stock, or I want to sell this other stock that we already have in the portfolio because something has changed, or because the price is at my fair value and I don't see more upside in this stock. Well, let's move to a different idea. I said the research is independent in the sense we don't have, or we shouldn't have, any bias in terms of, I know the company, I know the management very well. So there is always the risk that, the closer you get to the company, the less independent you are in your judgment. And I think this is an important thing that particularly on the buy side, you have to keep that. Yes, you can know the company, you can trust them, but then number speaks, and maybe sometimes number speaks and tells you a different story. I mentioned here also the time horizon. If you are long-term, sometimes you don't need to make the comments on a daily basis on everything that is happening that you feel is irrelevant, but you try to look really through the news flow and focus more on what the company can achieve in a few years' time. One thing that is also different is that we focus on idea to, not going back into to talk about money, but we want to make money. For us to make money means to have a better performance than a benchmark or an index. And again, it depends what strategy you manage. We don't do maintenance research. I'm not going to talk about a stock that nobody cares about just because it's a big stock or because I know them. I try to focus my work only on ideas that we are interested, because I know I have only a certain amount of hours per day to do my job. And there are many stocks. And this is also another difference between the buy side and the sell side, is that on the sell side, you want to have a very deep knowledge of a small number of stocks. Because as Marcello said, there are many different analysts covering Italian banks, UK banks, French banks, German banks, when we talk about banks. I specialize more in financials, I look at global banks or European banks, and it's only me. And then I have maybe the insurance as well. There are other firms where there are more analysts, and maybe there is one or two doing banks, one doing insurance. At Pictet, that we have a slightly different model, I cover the financial sector. So I have a lot of companies, so I need to focus my time and my ideas. And the teams, because of that, they're smaller. I'm at the one-man team in financials. At KBW, Philip, how many analysts you have?
I mean, of course, US and Europe must have 40 analysts.
40 analysts. So their knowledge of every single stock is greater than mine, but I need to focus only on what I think is important for me, not for somebody else. For them, maybe they need to please many different parties. And the coverage, I mean, for this, the coverage is very broad. You wake up in the morning, you say, okay, I'm going to look at these stocks, and then maybe something else happened. You have to look at something else, a stock in Asia. The culture, how you're remunerated or you are judged by the company, is very much performance driven. I would say, going back to Brunello's slide, 60-40 is already very good. And I don't have it here, but I analyze the performance of the funds at the end of the year, and 60-40 is a guarantee that you outperform the benchmark. It will be a very unlikely event that if you don't do it. It means that maybe in the 40, they went down a lot. But in a normal market, 60-40, you're doing very well. 70-30, exceptional. 80-20, you change your job because you're done. And also, as you probably understood, we have a relationship with many different sell-side analysts. In the past, as Philip said, we were talking to a lot. Now, because of MiFID, every time we speak to the sell side, we get charged. So we read much more the research and we use it in a different way. But if I look at my mailbox in the morning, is full of emails. Probably there are 200 emails per day. And so we interact with many sell-side analysts, and we have to pick the best one, or what we think is the most relevant for each different stocks. And the beauty also of this job, both buy side and sell side, I think, is from early age, you are exposed to the top management of different companies. You talk to, or you go to a meeting with the CEO or the CFO, or even of a large institution that maybe in a different job, it will take years to get to know them or to get to the same place. Here, after maybe the first couple of years of internship, a bit of experience, but you have the opportunity to sit with the top management and exchange ideas and views with people that have been working and have reached a top position in their own industry, which I find it very interesting. My last point, and probably I will skip the following slide, but one point I want to highlight is also what are the characteristics of the people. One thing, okay, you have to be curious, because there are things with curiosity, you can find opportunities to generate a lot of performance or a lot of money. You have also to be relatively calm as a character and manage the risk, or the risk and the uncertainty. Very often when I wake up in the morning, I don't know what is going to happen that day. I might have my plan. I think tomorrow I'm going to do this, this, and that. And then something happens and you are completely diverted in a different direction. So you have to be able to work under uncertainty. It's not a 9-to-5 job. It can be a 6 to 8 or a 7 to 6. 9 to 5, I can exclude it very often. So if you're not prepared to work longer hours, waking up early in the morning, working until late in the evening, with this level of uncertainty, probably it's not a good job. It's not, you will psychologically suffer. It's not. But if you think this is something that is interesting for you, you have to be, that is the type of environment. And for example, I had my plan last Friday. I have my meeting at 8:30. I have another one at 9. And then the situation in the US happened, which completely diverted the interest during the day of a bank that we are not invested. I was not in the funds that I managed. There was no investment in Silicon Valley banks, but everybody started asking what is going on in the banking sector, what is the read across for other banks, what is the read across for the European banks. And since last week, I had a lot of people coming and talk to me that normally they don't do it, but suddenly there is this spike of activities, and you have to be prepared to be able to interact and to manage your time in this way. It's not, as I said, a 9-to-5 job. It's not a job, at least on the way we do it, where you have your deadlines. I'm going to do this research by this date. The market doesn't wait. If you're not ready to take the opportunity when there is in the market, the opportunity is gone. Then there will be another one. But the market, the stock price movements drive your activities. And when you have an idea, you have to try to be quick to implement it if you think it's a good idea, because it's very rare that you are the only one with the good idea. So you want to try to execute it before other people look at the same. I think, as I said, for me, the main thing is that there are different roles of the buy-side analyst based on the institutions, based on the investment philosophy. We all do research. We all try to specialize in sectors, but with a very broad coverage and maybe the sell-side analyst.
Perfect. Thank you. We're almost at the end for the Q&A. Just one more slide, I think. And then 5 minutes for the academy. So without repeating, I think just to wrap it up before we move to Q&A, since we all started working, Philip, a few years earlier, but not many, many things have changed. And I think if we need to summarize what the drivers of change have been and continue to be, are clearly regulation with MiFID II, technology, clearly, the market is much more accessible for everybody, also for not so specialized people, and you have access also to asset classes that in the past you didn't have access. New forms also of funding, like with their limitations, with their defects, but crowdfunding, SPAC. But clearly the city and the financial industry in the world is massively affected by this. And all you need to know is to look at the market cap of the sectors. I show you a very interesting slide. We look at about countries. I got another slide that looks at sectors. In the 1900, rail was more than half of the US market. If up until last year, technology, you had 7 stocks in the S&P 500, making up 20-25% of the entire index. 7 stocks, technology. So clearly things change very quickly over time. And I think those, and you listen to the insights of my friends here and mine, you need to be prepared to grab. So you're clearly studying now. I have a lot of people, like Stefano was saying, they call me up, they say, Professor, I would like to be an investment bank. And I said, you need to do weights. You need to be physically and psychologically ready, because if you go and work in a bulge bracket, or even not in a bulge bracket, and you need to do pitching, you have managing directors above you, they want you to pitch, you could end up working 16 hours a day in some of the very aggressive bulge bracket firms in the so-called hot sectors. So it's important to know exactly what you like to do, what you want to learn, where you're going, and have a good idea, because otherwise you will step into uncharted territory with some surprises. So I think we just open to the question. We start obviously from the floors, given you here, then maybe we'll take a couple online. Any question? There are no silly questions. Anything you want to know?
First of all, thank you very much.
Yes.
When I said I do understand. Hello?
Yes, we can hear you.
Marcus, full time. And I would like to ask to Brunello, what tools do you use for forecasting macroeconomic variables or other type of, for example, as a president as well, which kind of tools do you use?
Do you want to answer? Yeah. So we have a question to Brunello from the public. What's your name? Elfie. Which kind of tools Brunello uses for forecasting macroeconomic?
So you would have to use some form of econometrics. How sophisticated it might be, it depends on you. When we do uni, of course, we teach you all the most sophisticated techniques. But the hard reality of things is that in the industry, you most of the time use Excel. And then based on Excel, you might use some econometric tool that might be eViews, sometimes MATLAB, but these are very specialized ways of doing things, and they might not provide better answer than a good Excel simulation, which is the reason why the classes that I teach here as part of my course, they are all based on Excel, because we found that it increases massively your employability. So for asset prices, you need to find some form of regularity. So you need to find a variable that commoves with the one that you're trying to predict. And then when there are deviations from one or the other variable, then these two variables, in theory, if they are mean reverting, they will eventually join again. And that's your indication of what's going on. In fact, one of the most exciting part of my early job when I was a bond strategist, in fact, was finding those co-movements, so charts that co-move in the same direction, and that gives you some interesting information. You cannot have your killer chart, the one that you can easily sell to clients. They will buy the story if it's a compelling evidence. I hope that answers the question. Thank you.
Hi there, my name is Lashans. So my question isn't not super technical, but it's like each of you in your profession is very impressive and the capabilities that you guys possesses. My question is for you guys is like what makes you like get out of bed to go to work? Like what keeps the fire going? Like what inspires you to some of these stuff I'm sure you might find is like very complex, but in the grand scheme of life, why do you continue this line of profession?
Sure. I will not answer to you now, but in my 5 minutes presentation, to me is funding the academy. So I gave up a well-paid job as zero salary, and for 2 years I worked probably 12 hours a day, counting not every day, but I mean to fund the academy. So that's why I'm very keen to present this project. So to me is using my experience and my contacts, because remember, on your own you cannot do anything. So you need experience, you need knowledge, but you need a network, and you need institution, you need contacts. So to me, it's leveraging this content and putting, in my opinion, to the mission of the academy, which is revolve, because I'm also an adjunct professor those days. So I actually spoke with a lot of people. I will show you in a few minutes. To me, is my fire is try to I can leverage what I've done so far to, you know, I don't want to sound a good Samaritan, but to basically try to help younger people like you, who, because I was like you, I came to London, was 24 years old as a young graduate, and I had a successful career because I worked very hard, because I met some people. I worked to meet these people, but basically try to make a shortcut for, not for everybody, because like students, there are, like in professional, there are good analysts and bad analysts. Good investment bankers, bad investment banker. Good economists, bad economists. It's the world, right? Good doctors, bad doctors. But to people that are good and motivated, my passion is to fund the academy and help you to find a job. And I will detail on this. So that's me.
I answered that.
Yeah.
Yes, so it's actually a good question in the sense that you really need to love your job, right? So if you don't like it, if you think you're doing only for the money or something, that's not the profession for you, because eventually you will find a moment in which you say it's too much, and it can be too much in a number of circumstances. Days can be endless. Now I changed from the time in which I was kind of an employee. I had my own firm. I'm also an academic, but it doesn't change what happens, which is what has been said before me. I know how my day starts. I don't know how, when, and where it will end, because there's always something happening during the day that, you know, I have a plan, but then the day can drive you everywhere. If you're not prepared to work 12, 15 hours a day, travel a lot, sleep little, don't eat well, and so on, these kind of things, work-life balance is not exactly how this profession is about. I know for the new generations, there's a lot about fairness, equality, good life balance, and all that kind of stuff. This is an industry where these concepts are little by little creeping in, but it's not, they are not exactly a good example of that. You have to work very, very hard, sacrifice a lot of your personal life to achieve what you want to do, but you do because you like what you do. You really enjoy making a good prediction. You really enjoy talking to clients. You really enjoy talking to policymakers, to travel and so on, because otherwise you are unable to do that job, I think. And I'm really sorry if I need to leave you now, but please, if you have further questions, there's my CT email address, and direct them to me or send it to Marcello. Yeah. Thanks a lot.
Thank you, Brunello, for being here.
Thank you.
Thank you.
That's nice.
You want to say 2 words?
Yeah.
Thank you. Grazie.
Okay, so yeah, what's the motivation? It's a few things. I think is one is kind of the intellectual thing. So there's a lot of material complexity data that you need to get on top of and get on top of quickly, and yeah, and summarize for people in speech or in writing. That's a very interesting process. then I think it's exciting. I mean, Stefano talked about the uncertainty. There's a bad side of that, but there's a good side of that. That you don't know what's going to happen. Events come out. Markets are in individual situations or markets inherently uncertain. So you're always going to be surprised. I think if you're open to uncertainty and surprise, you find that exciting. That's good. Then I think it actually is a lot of fun. I mean, and partly this relates to you're working very closely with people. You're kind of cheek by jowl. If you can form good relationships, you have a lot of fun. And I think there's a kind of a comedy in the sense that because you get a lot wrong, 30-40% wrong, you have to deal with that, and you can actually have a laugh about it. And then it's quite well paid. I mean, sadly, it's not as well with technology and change and regulation. It's not as well paid as it was, but it's still a relatively paid and fun job.
Thank you.
Maybe just add on a couple of things. I wanted to be an architect at a certain point, and then I watched a movie, and then I decided, okay, maybe I do finance. But I watched, it was an iconic movie of the 80s or 90s, and it was Wall Street, and probably something more for our generation than yours. But that was what drove a decision to move from being an architect to work in finance. But apart from the jokes, is what Philip said, is that for me is a very complex job. You have to process a lot of different information and make up your mind on something and trying to be right, because people can process the same type of information and reach a very different conclusion. And so it's trying to be right more often than not on imperfect information and work in this uncertainty and uncertain environment. It's also a job where, as I said, you get to know successful people, different people. You are exposed to many different things. It's a job where you don't need to be, if you want to be an economist, maybe if you have a background in mathematics, it's better. But to work as an analyst, you don't have to be a scientist. You can be, but you don't have to be. You need to maybe have an interpretation of different information coming from different backgrounds. History, for me, I always tell my kids, to study history. History probably is a very interesting aspect of this job. You want to see what has happened in the past and try to understand if it's going to repeat in the future. Psychology is another important factor. At the end, the market is made by people buying and selling based on different ideas or different state of mind as well. So try to put all this together. I think it makes the job very interesting. And this is why we wake up in the morning. And this idea that I want to be right on my ideas, but also I want to change my mind quickly. So to keep processing the information without thinking, oh, I've done my job and that is going to be there for the rest of the next couple of months. No, you have to question yourself all the time.
Any other questions? If not, yeah, go ahead. Yeah, go ahead. There, start. Go ahead.
Thank you for your presentation.
Sure.
My question is your value in computer science, the worth of taking a computer science.
So you're asking, so the question is how important it is to be able to attend a course in computer science? Like from the most simple things to... Oh, okay. Well, I don't teach the kind of subjects, but I deal with a lot of students, and I also have quite a lot of internship around and people. And clearly, if you Google highest paid profession, and I deal with a lot of university career service, so clearly there is an obvious fact, which is what I mentioned before. Look at the market cap of the world. Now, with what has happened, if you dissect the sectors, and Stefano, please correct me if I'm wrong, but I think healthcare is probably up there as the biggest market cap in the world. So the world keeps changing, and the dominant forces keep changing, and the skill required keeps changing. So a friend of mine who studied with me at high school in Italy is probably more paid than a banker these days, and he studied pharmacy. And in the last 3 years, and he lives in my town, I grew up with him. I grew up near Venice, outside Venice, and he's already changed 3 jobs. And it's because he's my age. Obviously, he came to school with me, and then I'll answer your question. But basically, that shows how you have some momentum, let's call it like that, which has come from behind. So healthcare has become, obviously with COVID, we all know what happened, but healthcare has become a prominent industry with a lot of money. They have at their disposal so much money to lobbying is a kind word sometimes, which can be used, misinterpreted, but they have so much money. So the clear has become a dominant industry, much more than, if you want, finance compared to the finance of the 80s with the movies of Wall Street and so on. So going back to your point, clearly, it is so important because technology that, as I mentioned, has taken a prominent role. Clearly, we had a market correction last year. We now live with inflation, interest rate gone up a lot, but as of, they're still the biggest part of the S&P index. And technology, which means very broad, means that you need to master for the future new wave of talking and understanding the world, which clearly comes from programming. So I'm actually looking for the academy. I got a task force, and Thomas just joined. He must be stuck in traffic. Thank you for coming, Thomas. And he's a programmer. And Thomas and other students, we will be leading and building some algorithm for the market, because the next venture of the academy is also the one to invest money. And so I think, sorry, it took me a very long time, but I just wanted to give you an example. I think it's very important to stay at pace with the new world of data. And data is the new gold. Used to be oil, now is data. And actually in the academy, which I will comment in a moment, with Brunello, we got 2 modules specifically about geopolitics and cyber warfare and data, which means that it's very important, in my opinion, to be knowledgeable, if you can, in data sciences, and because a lot of jobs will open up there with machine learning, AI. Now we've got all these uptents that work, don't work, ChatGPT, but this stuff will be mainstream going forward. So if you haven't got an understanding, you'll be cut out for a lot of jobs, I think. I don't. Yeah, you can, absolutely.
So if your question is how important computer science is in a finance course, I think it's very important. Now, Brunello mentioned before, we use Excel. And if I think 20 years ago, people were using maybe a piece of paper. Now we use Excel, but the next one is certainly to use different type of software, Python above all. And also, if you think the use of data, even in finance, has grown exponentially. Everybody wants to have the latest information. And we look at companies, we look at quarterly results, but you can have credit card data nearly on a daily basis, frequency of access to a shop, or you have so many data now that I'm not able to process personally, but we are trying to do as a company to have even more and more data scientists to be able to scrap this data using Python or using other technologies and interpret this data that can help us to form an opinion and form an investment case. So I think it's going to be one of the requirements for even for this job, even if you're an investment banker, to be able to use the technology more and more. So I wouldn't, I mentioned before to study history or philosophy or psychology that are important factors, but I think to have some skills, even on data and computer science, it's very important.
Another question from there?
Thank you for that presentation. I have a question about the beginning, like after graduation, to apply for. I heard that applying for internship placement is, even though it's not required, yeah, but it's easier than actually a full-time job, graduate job. Is that true or not? And everyone I asked about applying for jobs have experienced difficulties with the exams that are given in the application, including me. I tried at least 2 exams so far. I failed. So they're very difficult. So everyone is wondering, are they meant to be that much challenging? And so, in general, what's the best way or best advice to apply for a job in this industry?
I take it.
You kick off.
Okay.
Yeah.
Well, I mean, the last few minutes of the presentation, because it's 2:45, so it's going to go out of the tree. We'll answer your question, but then I think presenting the academy, and I'll be very quick, 5 minutes, is actually my answer to your question. What the academy is about is really to, we're not substituting universities. It's impossible, right? But we're trying to give the extra edge and try to give you a bit better practical, in a way, toolkit like we've done today, that you hear really from the experts, from people whose life is doing this every day, because they get people. I've interviewed many people as a professor, as an investment banker, so we know what it means, and that's really the mission of the academy. We're trying to prepare, starting from a masterclass in investment management, but then we're engaging with a financial institution. So we're going to be engaging with, my target is 100 financial institutions in the world, and we're doing a lot of one-on-one call with their HR department in charge of graduate recruiting. A, to really understand what you're looking for. B, to try to understand the right skills that are required, because maybe your profile will not match a certain job in the financial industry. Assuming you want to be in finance, you might not want to be in finance, but maybe it will match another profile in the financial industry, and that's what the academy is about. Try to prepare you, give you a general knowledge of the markets through the masterclass in investment management, push you to take an exams, because only students who take an exam after they do, and the masterclass is online and it's about 24 hours. It's not like a course, but then you need to take a course, and we already select from there. So that will put you in the right mindset. Ooh, maybe I'm lacking certain skills, and maybe if I fail 2 or 3 times, it's because I need to strengthen certain skills, but you find out only by doing this, and that's what the academy is about, and I'll explain in a few minutes. I don't know if you want to add something.
I'm not familiar with the large human process, but if you give me your details, I'll find out. But let's say that don't be discouraged. You don't need to be a genius. I think what I think we're looking for is more of a place of personality, having curiosity, having on the sell side, what's important is responsiveness. So kind of an eagerness to to respond to client requests, to work, to be a good team player. So I think personality is extremely important. So if you're a graduate, you're interested in markets, you'll be fine.
If I can maybe, at Pictet we have a proper established internship procedure. So we collect all the CVs, the HR, go through that, and then we select every year. We select a number of people that they will come for a round of interviews and assessment. Then only maybe 2 or 3 people, depending on the year, will be selected to do an internship program that lasts, depending maybe even 1 year, moving to different parts of the firm. But it's quite, quite rigid. And I'm probably that we don't have a full assessment, a full test, as you mentioned, but there are different steps that people have to go through. And the first one is obviously is the CV, the first part that we receive. And I have to say, when I look at the CVs from the young graduates, and now compared to what it was in the past, they are generally quite impressed. One thing that we always value quite a bit is experience in different countries. Maybe you study here, then you do maybe 6 months or 3 months in another place. So that it is always something that we put a lot of value. And this is the first part, then, to be selected, be part of this internship selection. We don't take people from the university anymore on a kind of one-to-one basis. They have to be coming in with this internship program. Then if you have experience, it's a different story. Even if maybe you're not working exactly in the same industry, but you gain a few years of experience, maybe you can apply for a different role. As it happened to me, for instance. But otherwise, it's the internship. You have to be able to go through this internship selection and try to show the right characteristic, the right thing that are asked to go into that process.
Perfect. Maybe in the interest of time, if we now, I would like just quickly to present the Academy. So we complete the picture and why we're here today. So as you can see, I wanted to create an academy and a main product starting from a masterclass in investment management with really the mission to prepare and connect students to the job market. So to me, the employability, which is what you were saying, is key. And when I started thinking about the academy, I asked myself 2 questions. I would like to do something which is useful, and would like to do something which is different, because there are thousands of courses out there. Some of them are very bad, some of them are mediocre, some of them are good. If I just do another masterclass in investment management, sure, it would be different because of the points, but I wanted to add really the usefulness and the difference to what was out there. And so my vision and the vision of the team with me is built around the 7 reasons, which we put 7 reasons to attend. First, why a masterclass in investment management and the world of finance? But let's start with investment management. Each of us need to find a job, earn money, save, and how to do. And I'm just going to show you a couple of slides. If you look at the pyramid of the wealth distribution in the world, without going into the numbers, you can have an idea. It's the number of millionaires and billionaires, very small. Why rich people tend to get richer? I think, to me, there are 2 key reasons. A, they got the right mindset to be rich. They got a mindset. You need to have a specific mindset. It just doesn't happen like this. And B, you need to have a process, because once you make your money, you can lose it very easily. And there are a lot of actors, singers that made a ton of money and they lost it all. They went bankrupt. So rich people get richer, or wealthy people, not talking like the very top, I'm talking like because they got the right mindset and the right process. Do they teach this process to us at school? No. In my experience, no. We learn a lot about finance, economics, but when it's investing, they don't teach it to us. Maybe in the future they will. Maybe it will come compulsory. It should be compulsory in a secondary school, in my opinion, just basic stuff, but they don't. I'm not going to go into the reasons why they don't, but it doesn't happen. And you might say, I'm not interested. I don't want to invest. I don't really care. It's not my cup of tea. But as you said, getting a job is getting more and more competitive. There is more and more pressure. I see a lot of students coming from Asia and other parts of the world, and they're very competitive. I'm not saying that you're not competitive. I'm just saying that the competition versus the past, you have much more competition anywhere, both in industry and among the students. It's a competitive arena to find a job. And there are not many jobs out there. And as I was saying, you could say, I'm not interested to invest. I just want to leave the money in the bank. Well, it's not a good option. Look at especially those days with inflation back to center stage. If you leave £100 in the bank, this is what has happened over time, the purchasing power of cash. So we have no alternatives. We need to invest. at least, or we need to give the money to people who invested for us, like Stefano Pictet, but we must have an understanding of what they're going to be doing with our money. We must have the right questions. We must understand what is right fees that we pay as a client. We must understand how they allocate the money. So I'm going to skip just looking at 30 years back. Look at the return. So US technology returned 13% per year, which I'm not saying you need to invest all in US technology. It's just an example. But cash was the worst returner over the last 30 years, 2.1%. So again, we are forced to invest. How do we go about it? The second reason of the 7 why I wanted to materialize my vision is it took me a year with the team to ask you what you wanted. So we implemented 100 one-on-one interview with students, and we sent 400 questionnaires around the world to America, the UK, Europe, and Italy, and with many questions. And we basically said, if there was somebody who wanted to teach you a process on investment management, what would you be interested? And without going into the details, surprisingly, the answers from America, the UK, Europe, and Italy by the students, so by you, were the same. We analyzed the percentages, and basically students put a lot of emphasis in this topic to 4 or 5 items, which were, we want to learn a process for investing in the market or understand the people that invest for us. We want to learn about risk management and asset allocation, so we don't want to make the typical investment mistakes. The teachers have to be credible, and the course has to be practical. And we don't want this to be a one-off. We want to be an experience. That's basically what all the students we interviewed from the States, Europe, and the UK told us. So after doing this for 6 months, and after experimenting this to my course at Venice University, where I invited, like today with this industry veteran, I invited last year my course, the Italian Stock Exchange. I invited BlackRock, which is the biggest asset manager in the world, and 2 very good analysts, one for technical analysis and one for fundamental. So I wanted to see the reaction of the students, and it was brilliant. They loved it. They said, you know, this is really what we want. And that's the third point, practical and results oriented. The fourth point is masterclass in investment management. I built it through my experience and my academic experience. It took me a year and a half looking at, I spare you the details, but I look at basically the strategies and everything of all the main asset managers in the world, including Pictet, BlackRock, State Street, Vanguard. So I went through a lot of material. And through my connection, my ex-client, Stefano is one of the person. We basically built a masterclass, which is divided in 31 webinars online recorded, where I teach half of them. And those people either are part of a panel, so like Stefano and another 3 portfolio managers, which are here, very experienced. We discuss with me, and that's free of charge. We discuss with me what are the issues in the market. And then with Brunello, who was here, we basically did 2 modules on geopolitics and cyber warfare, and what to expect with China, US, with this new Cold War. Where are we heading? And I learned a lot because Brunello is an expert. And by doing this, I actually have very good ideas, which might not happen, but I have new kind of lenses to really read the phenomenon with the eyes of an expert. Francesco Sedati is the head of equities at Intesa Sanpaolo, is the biggest bank in Italy. Chad is a portfolio manager in the US, Filippo. So long story short, Elisabetta, she works for Macquarie, used to work for Macquarie, now in Australian Super. She's very experienced in private equity and private debt. So we put together, like I was asked by the students, panel of people which are beyond doubt on reputation credibility, because that's what they've been doing in the markets. The 5th pillars out of the 7 is what we're doing today. So Mercury, the academy, sits between you and the universities and the financial world. And the idea is to bridge the gap between these 2 worlds. And that is why we are reaching out, as I pointed out to you, to the HR departments of all the major financial European funds, so that we have a direct link. And once people like you take an exams and we'll look at your CV and we'll have the matching requirement from the institution, we'll know exactly, maybe your CV is good to go in one part of the industry and not in another part of the industry. But we got the connection. That's what we've been working for 2 years. Number 6, and I'm almost done. The student asked, if not a lifelong experience, but a multi-years experience. I'm not interested to sell you a course, and that's it. That's not what we want to do. We want to continuously engage with the student being part of the masterclass, that then will continue to be part of a financial community where we will provide content like you had today. We will go into topics with other firms which have come on board. And so people learn, even if you find a job, but you can still stay on touch of the markets if that is your interest, with certain topics, with an ongoing experience. And that's what we want to do. And finally, it's not going to be an easy task. It's not going to be a short task, but we're also talking to a few universities in the future, because as a professor, I know that people want to attend courses because they got university credits. So maybe in the future, when the masterclass will be more known, we will maybe it will be certified by Paris Business School one day, who knows, or by City University of London. But we are talking to certify the masterclass. So we will assess the students who want. It's not compulsory to take an exam. You can just do the course and say, okay, I learn, I'm part of it, but it makes sense to try. It doesn't cost money to do the exams, and try to have it. And if you pass it, you got good CV, then you got the employability options and you got all the other benefits. So I think it probably makes sense to remember that. We got our social pages. So my advice is connect through the LinkedIn, Mercury Partners Academy, or write to the address academy@mercurypartners.net. And because there will be more coming out, we will release everything. There will be more live events. And that concludes basically the presentation to you. Now, I hope you enjoy. I thank you very much again, our guest and Professor Kidd. And obviously, I'm gonna have some closing remarks to Professor Kidd Pilman, which I thank you again for. Despite the unlucky day, we will circulate these online, so there will be more following. Thank you.
Well, I'd just like to take the opportunity, first of all, thanking the students who battled in today, because it was every tube station blocked, and thank you for all coming in as you planned. But also, you know, at the universities we teach academically everything, you know, portfolio theory, obviously, you know, forex market, equities market, but it's quite theoretical. We do try to put case studies in, but you know, the opportunity to meet market professionals like yourselves, Stefano, Philip, Brunello, Marcello, you know, it really gives those insights to us. And although you know, we've not had as many of us we'd like to come in, we've still got the ability to disseminate everything. It's all been recorded, and so we will send it around the university